Today is 9th of December. It's a Wednesday, so let's kick off with the key highlight for today, which is the Reserve Bank of New Zealand, which is said to be cutting interest rates tomorrow at 4 a.m. During their official cash rate. Because of a low inflation, we have falling dairy prices. But for myself, what I see is that the currency level as of now, it seems to be in a uncomfortable zone for them to reach an inflation target of 2%. So if you look at the chart right here in the day one chart, it seems that there is a pullback as the price reaches the price of 0.6781. This is a day one chart. Alright, and let's zoom in the 4-hourly charts. That was the previous exhaustion level, the first exhaustion level, the price of 0.6757. It starts to push back, and we have also seen a pretty much of a consolidation in that region itself. So it seems that the price of 0.67 is a uncomfortable level for their currency level in order for them to grow the economy faster to reach the inflation targets. So the Reserve Bank of New Zealand as of now may really cut interest rate by tomorrow 4 a.m. during their cash rate. So back to the technical chart itself, we have seen that there was previously a rising trend channel. Although price has broke above the top of the rising trend channel, but it still pulls back due to the currency level that's too strong, and with the fact that most economists is betting on a rate cut, so therefore the price continues to fall back to the trend channel and it's about to reach the bottom again. And so if the Reserve Bank of New Zealand is going to cut rates, we can expect the price to fall all the way to the support level at 0.6503. Right, if you look at the day one chart, this is a key support level starting from 2015 July. And it becomes a key support again when it comes to 8th of November this year as well. So that will be the key price to take profits if the Reserve Bank of New Zealand were to cut interest rate from there. Right, and next we have the Australia against US dollar, and of course we have the employment change and unemployment rates tomorrow morning at 8:30 a.m., which should definitely greatly affect the prices for the Australia against US dollar. Especially right now the currency level is also seems a little bit too strong, and we can see that in the past the Reserve Bank of Australia, the Governor Stephen has been saying that the price of 75 cents is the ideal price for them, but it seems that the benchmark has fell to 73 cents if we look at the technical chart itself, as the highest it went back to is 0.7377. So that's somewhere slightly above 73 cents against the US dollar. And then we start to see it pulling back. So there's two top right here that actually signals that the benchmark for a comfortable price for the Australia has fell from 75 cents to 73 cents, and the employment data will give clues whether the Reserve Bank of Australia may want to cut interest rate as well. So it's going to have a huge impact on the currency. And of course, back to the technical charts, in the 4-hourly chart, we have seen that the price has broken below the bottom of the rising trend channel. So that signals for further depreciation. And then price is currently falling back to a consolidation while we wait for the employment change data. So hoping to see that the price begins to retrace all the way back to, or at least close enough to the bottom of the previously broken rising trend channel to look for the sell opportunity. So that will be somewhere the price of, maybe let's zoom into the 15-minute chart. What we can do right here is to plot a trend line. Alright, so most likely somewhere at the price of 0.7241 would be a good price to look for a sell. Alright, so that's for the Aussie against US dollar. Next, I would like to touch on the dollar against the Japanese yen. Alright, so back to the 4-hourly charts. As we know, the price has been trading within a range between the price of 122.28 to 123.58, and price has already begun to fall as Japan has posted pretty good final GDP data, which shows that their economy is still on track towards the inflation target of 2% as well. So you might expect further appreciation from the Japanese yen, which will cause the dollar against the Japanese yen to continues to fall. And we shall wait for the price to fall all the way back to the price of 122.28, bottom of the range, to look for a buy opportunity again, because of course at the same time we are expecting the Federal Reserve to raise interest rate in just a week's time, on the 16th of December. Alright, let's take a look at the euro against US dollar. So as we know that the price has surged a good 450 pips or slightly a little bit more, as the European Central Bank President Mario Draghi has disappointed the markets by keeping the interest rate unchanged, and also not introducing any further stimulus or fresh stimulus to the market. So we have seen that the price after surge has been retracing downwards, making a market correction, but we have also seen that the price has got supported based on the 4-day chart at the 200 moving average. And if we zoom in the 1-hourly chart, we pull out a Fibonacci retracement that was the retracement level of 38.2%. So that did help support the price to then rebound again to a higher level. So we're actually waiting for price to appreciate further back to the previous high at 1.0973, because at the end of the day we are still waiting for the Federal Reserve to raise interest rate that will help to boost the US dollar, and of course causing the euro against the US dollar to continue to fall and resume depreciation. Alright, so as we can see right now in the 15-minute chart, price is still appreciating steadily. We can actually look for an intraday long, okay, based on the 15-minute chart, and the trend line itself. Wait for the price to retrace slightly further. Firstly, back to the trend line here, it will be somewhere the price of 1.0891, and if it breaks a little bit lower to the next trend line, then that will be somewhere the price of 1.0881. So in between this region will be a good price to go for the intraday buy, all the way back to the top or the previous high at 1.0975. Or if not, we can just wait for the price to retrace all the way back to the previous high to look for a longer term of selling. Alright, last but not least, let me just quickly touch on the dollar against the Canadian dollar. As we know that the price has already broken above the key support term resistance level based on the monthly charts. So that signals for a lot further appreciation from here. And of course, we have seen that the prices of oil has been falling drastically as OPEC refused to limit their production on the oil itself, which will cause oil to plunge. And of course, Canada being a country that exports oils the most, was affected greatly, and Canadian dollar fell as a result. So in just 2 days, we have seen that the price has appreciated close to 200 pips. Right, so what we would like to wait for right now is just for the price to make a major retracement. Right here, probably what we can do is to plot the trend line to see if this is actually going to form a rising trend channel. Seems like there's still a little bit more before it reaches the top of a probable rising trend channel. And so since we know that there's still a pretty much gap towards the top of the channel itself, let's wait for the price to retrace further to a better entry price to go for the buy. And what you can do here is to plot the retracement level. Hopefully, as you make major retracement back to the 38.2% retracement level at the price of 1.3494 to go for the buy again. Alright, with that, I have come to the end of today's trading analysis video. So thank you for watching, and I'll see you again tomorrow.